On today's podcast, we had our very first stock person on. Good friend named Mariusz, who's from Poland and moved to the States and got his career started in microcaps, investing just $10,000, and he has turned it into millions. Now, I know many of you listening are probably thinking that, oh, it's a scam because these are microcaps and, you know, he's day trading. It's like, no, he's doing it in a very completely different way that resonates with me. He's looking at companies for the long term. He is talking to CEOs of these microcap companies, and he actually goes in depth on the podcast on how you can do the same thing too, and how you can start looking through these different companies and figuring out where you can add value to the companies outside of just investing. So I thought it was really cool, and he gave me a lot of things to think about for my own companies potentially on whether I wanted to go public at some point on one of these smaller stock exchanges. We also talk about just all these different things that I could potentially do with talking to the CEOs of these real estate companies who have microcaps. So it's really cool. I learned a lot. One of the episodes that I've learned more on than anything. So make sure you guys stay till the end because I think you're going to learn a ton. Now, let's jump into it. Are you looking to grow your real estate investing business? My company, Future Flipper, can help. We've taught hundreds of people all over the country how to flip, wholesale, and buy rental properties. And it doesn't matter where you're at in your investing journey. Whether you're trying to get your first deal or scale your company, Future Flipper can help. We have courses, coaching, and events for all levels of investors. So if you want to take the next step, go to futureflipper.com and book a free consultation to see how we can best help you. Once again, that's futureflipper.com. If you've ever wanted to invest with me on my real estate deals, it's now possible. At Pineda Capital, we're purchasing value-add real estate all across the country. This includes multifamily, commercial, and land development. The best part is, with my network, social media presence, and marketing strategies, we're able to get the very best deals that others don't have access to. You can join in with me on those deals if you're an accredited investor. If you want to learn more, head over to pinedacapital.com to see our current opportunities. Once again, that's pinedacapital.com. Welcome to the Ryan Pineda Show, where our mission is to invest.
I only expect to make money in things that I understand.
Innovate.
It's about believing in the future and thinking that the future will be better than the past.
And inspire. I am much more likely to hit my goal just due to putting it out there.
You're now rocking with the best.
What's going on, everybody? Welcome to another episode of the Ryan Pineda Show. Today, I've got me a stock guy on. I don't even think I've had a stock guy on, so this is the first time ever, which seems kind of odd. I should probably get a little more diversity in here, but this man is not your typical stock trader. He is specializing in microcaps and identifying companies that people just don't even know about that are poised for really big things. And he's also from Poland and has a very tough name for me to pronounce, but I got none other than my man Mariusz. Did I say it right?
Yep, you said it right. Just don't say the last name.
Let me
do that.
Yeah, how do you say the last name?
Skonieczny.
Skonieczny. All right, so, dude, man, happy to have you here in Vegas.
Yeah, thank you for having me.
Yeah, so you've been trading microcaps since, what, 2009? Is that what you said?
Yeah, well, I mean, let's go back a little bit. I graduated college in 2003.
Okay.
And then for about 5 or 6 years, I was in the real estate space. So that's kind of like why I listen to some of your videos, because I can relate to what you're saying. And I was a real estate appraiser and a broker. And then in 2008, right when the world was falling apart, I left the real estate industry and I went full-time into stocks.
Okay.
But during the time that I was in real estate, I was studying and investing in the stock market. But then I seriously took it from literally December 31st, 2008 was my last day in real estate. And January 1st, 2009, on my birthday, was my first day in stocks.
So I'm guessing the big real estate crash had something to do with maybe that decision?
No. What happened was that when I entered the real estate industry, 2003, this was the time when Poor Dad and Rich Dad got these books. So I was kind of like, where do I go, stocks or real estate? And I didn't have any money, so I figured the best way to learn about real estate would be to learn how to appraise, right? So I got on the phone, started cold calling appraisers, and I got my first job like that.
Okay.
And while I was in real estate, appraising residential, then I wanted to do commercial, and then I moved into the brokerage side. I was part of a team that sold apartments at Marcus & Millichap.
Okay.
And during that time, you know, I was studying everything about Warren Buffett. I was studying businesses. And simply, I just realized that while real estate was nice, I didn't have the passion for it the way I had for stocks.
Right.
And I just made the call. I said to my boss, I'm leaving.
Yep.
I had my 10,000 from a sale of an apartment building. And then I took that 10 grand and went full out into stocks.
Yeah. And you're telling me pre-show, but what have you turned that 10,000 into?
About 7 million today.
7 million today. Pretty much just trading microcaps at this point.
Well, I wouldn't say trading, because trading, think about this. If you have an orange and you buy an orange and you resell that orange, that's trading, right? You're trying to get a little bit of money in a short period of time.
Right.
What I like to do is, with my companies, I like to invest in them. So I like to hold them for years. And so what I want is, I want to buy that orange and I want to cut it up and make a salad out of it. In other words, I want to add value. And that's what I want my companies to do. I want them to grow. I want them to become more profitable, sign up more clients, or maybe unlock a value of an asset, something that's going to make me more money over time. But usually it takes anywhere between 3 to 7 years.
Yes.
That's how I hold them.
Yeah, you're not flipping. You're in this for the long haul.
Yeah, yeah. Because, I mean, think about your situation with business. You run a lot of businesses. How long it takes to sign up a client, how long it takes to grow into something. Like, people don't realize that. They look at some successful people today and they're like, oh, you know, I want that. Like, that was 10 years in the making.
Yeah.
You know, they don't realize that. It's like that with businesses too. And that's what I want. I want to find businesses like gems when nobody's paying attention. And then I want to hold them. And maybe I want to help them along the way. But the big money is made. The big money is made not trading. The big money is sitting on your ass and doing nothing.
Right.
And waiting for the things to happen.
Just picking winners and then just chilling.
That's
and having the discipline not to
Yeah.
sell too quick.
And that's hard, because think about the people that have money. Usually people that have money, how do they make this money? In a business, right? So in a business, what do they do in a business? They hustle. They hustle, and then they get clients. They're active, right? And so then those same people, when you put them in the stocks, they don't know how to behave.
Right.
Because in stocks, you're passive. You might help the management a little bit, if it's a small company, but you're passive. So active people like have a hard time sitting on their butt and doing nothing.
That's my problem.
That's why it's good for you to run businesses.
Yeah.
Right? Because if that's, you know, it's separate, it's a different skill. But the hardest thing for money managers to do is to sit on their butt and doing nothing.
Right.
That's the hardest thing.
Right. I forgot. I recently read a book, and they just basically talked about how, you know, stock traders aren't necessarily always picking winners. They're just really good at cutting their losses quick and then really riding their big winners. Like, you know, the worst traders are the ones who basically try to flip. They're the ones who, after they get a good gain, they're like, oh, got a nice 40% gain. Boom, I'm cutting it off. And then just had they held it, you know, they could have made 10x, 100x, like, but they just couldn't resist the temptation to take that gain. And then they like to hold on to their losers because they're like, oh, well, at this point, I might as well just wait it out. And have you seen a similar thing with just even on the microcap side?
What I see is misconception between trading and investing. And
Right.
some people think that they are investing, but then they're trading.
Right.
And, you know, now with so much information and out there, it's like I don't even know how many people realize what it is that they're doing.
Right.
And some people have certain rules, like, you know, by the way, 90% of traders lose money. Okay, 90% of them lose money. Why is that? Because when you're trading something like short term, whether it's you buy something one day, sell the next day, or buy something and sell it the next week or next month, tell me, how much can a company change in value from one month to another?
nothing. You're just hoping that you got a really good deal, that you caught a dip.
Yeah. So you're hoping that maybe you can resell it to someone else because there's more excitement in a month from now, right? But the actual company itself, not much has changed. So if not much value has been added for a month, how can you expect to make a lot of money? Like, it's not. You can't expect to make a multi-bagger unless, of course, you're leveraging the heck out of it. You're going on margin. That's a different game. But, you know, people say, I don't know who said that people overestimate how much they can achieve in 1 year, but they underestimate how much they can achieve in 10 years.
Right. Yeah.
Same thing with businesses. You know,
Yeah.
When I look back at my biggest winner, I found this company in 2017. The market cap or the value of the company was $3 million.
Okay.
Today it is $500 million.
Crazy,
Right?
dude.
5 years. But
Yeah.
why was it like this? Because they have done something. They solved a problem, a legal problem, because they were involved in a title dispute over a property.
Right.
So, you know, you can relate to it. Real estate, it can have title disputes.
Right.
Right. But it was a big property. It was a $500 million property. It was a copper property. And they solved the problem, and then the market adjusted. And then I was able to get into this when nobody was paying attention and nobody was studying the situation and trying to figure out if the title dispute was going to be solved.
Mm-hmm.
But it took some time. And
Yeah.
then when I got involved in 2017, I'll tell you what, it was 2 weeks. They told me, oh, in 2 weeks. Every month it was 2 weeks, 2 weeks, and 2 weeks. And then the 2 weeks turned into, 4 years. But you know what? That's life.
Yeah.
You know? It doesn't matter what it is that you're trying to do, grow a YouTube channel or grow your business. Like, people want success right away, but, overnight success takes years. And if you've achieved anything in life, you know that.
Yeah, 100%. So, this company you're talking about, what are they called?
Oracle. O-R-O-C-O.
Oracle. Okay. So, you get in this company when they're freaking $3 million microcap. Or market cap. By the way, explain what a market cap is for those who don't know and what a microcap is.
Okay, so because so many of your listeners think in real estate terms, let's think in the real estate terms. You have a house that's worth $100,000.
Mm-hmm.
Okay, if you are the only one that owns it, you own it 100%. But let's say 10 people own that house. So each person owns $10,000,
Mm-hmm.
right? 10 shares. So market cap is $10,000 times 10, because there's 10 shares. So a total value of the company, total equity of the company is called market cap.
Yeah. Okay. And so what would you define as a microcap?
There's many definitions. Some people say it's below 500 million. Some people say it's below 250.
Right.
It's just not in the billions, Some of the companies that I own stock in, they have 10 million market caps. Some of them have 500, some of them 300.
So do you get more excited seeing, the one that's a 10 million market cap versus the 500?
It depends. What I pay attention to is what I pay for something. You see, price is what you pay, and value is what you get.
Mm-hmm.
Okay, so if I'm paying 500 million market cap for something, but I think it's going to be worth 5 billion,
yeah, 10x.
I'll go for that. But
Right.
if I need to pay 10 million market cap, and it's going to go to 50 million or 100, it doesn't matter. I'm looking at a business.
Yeah.
And in the financial industry looks down upon microcap stocks. They call them penny stocks.
Yep.
Anything below $5 is a penny stock.
Mm-hmm.
And I always like to use this example. It's ridiculous because let's say you have a 100-unit apartment building, okay? That apartment building, let's say it's worth $10 million,
Mm-hmm.
right? You will have many people that would love to own that apartment building in their portfolio, like as a retirement, or they wouldn't have a problem putting 100% of their net worth into the apartment building,
Mm-hmm.
right? It's safe, it's good. Now you take that apartment building and you take it public, and those shares are trading publicly. Now it's toxic, because now it's microcap. 10 million market cap. Don't touch it. It's too risky.
Yeah.
You're going to lose all your money. How
Right.
ridiculous is that?
Right.
It's stupid. It's not the size of the company that matters.
Right.
It's what the company is that matters.
Right.
Like there's some small companies out there that are shit. Like you shouldn't touch them.
Right.
I agree. Don't
Right.
touch them. Touch the ones that are good.
Well, you know, even just thinking about a microcap, right? Like all my companies, they're not public or anything, but they would be microcaps. And I'm telling you what, I wouldn't sell any portion of my companies to anyone because I like where we're headed.
Yeah. And if I was interested in, if your companies were public, right? I wouldn't look at it and say, well, they're microcaps, I'm not going to touch them. I would call you and I would be like, explain me the business.
Yeah.
Like, show me the financials. Like, and then I would pay attention to whether your business is good or not how big or small it is.
Right.
Or whether your stock is trading for $5 or 50 cents. It doesn't matter.
Right. So speaking of that, right, you saying you would call me up. This is one of the advantages of microcaps. Tell me about that.
You can get on the phone and call the CEO. Like all the companies that I own the stock of, every single CEO is in my cell phone. Every single one.
That's crazy.
Yeah. And not just CEO. I might have the CFO or multiple people, because think about this. If I am interested in your business,
right,
like, who is the best person to teach me about that business?
Me.
Right. Like, so you might lie to me, right? But then that's my job to be like, I'm listening to him, I'm getting education from him, but then at the same time, I need to go to other sources.
I got to fact check what he's saying, and he's not just hyping it up.
Yeah. And people think, oh, the CEO is going to sell you stuff. Yeah, it's their job to sell you the company. but like, none of them are these sleazy people. Like, every situation is different.
Right.
Sometimes you get very nice people. Sometimes they're assholes. Yeah. But you know what? It doesn't matter. I want to call you. Because you know what? Not a lot of people call you, right? When you're a CEO of a microcap company.
Right.
And they will spend hours with me on the phone, explaining to me the business, or they will allow me to interview them on YouTube or my website, whatever, because their job is to expose the company, right? If they're a public company, they need to bring in new investors all the time.
Right, 100%. So just thinking about it from that sense, as far as you're reaching out to these CEOs, you're now, you know, we talked about this. You had mentioned one of my videos where I said, hey, the reason I don't invest in stocks is because I don't really have influence over them. You know, I'm like, yeah, I could go buy Tesla today, but whoop-de-doo, right? I could go buy Bitcoin today, but it doesn't really matter. And with real estate in particular, I'm like, I like real estate because I know I'm buying it at a good deal. I'm going direct to the seller. I know that I can fix it up, do things to it. Like any business, I can go in there and add value to it. So with microcaps, what is your perception of it in terms of like value you can add compared to Tesla or something?
That's a great question. So I run this website called microcapexplosions.com. Okay. We have about 300 members. And so sometimes what we do is we add value to the companies. We raise capital for them and we create our own success. Okay. So let me give you an example. It was this company that had called Globex. They have a private messaging and email communication system that's truly private. Mm-hmm. And everything that they have is hosted in Switzerland. So in other words, if you and we communicate through WhatsApp, that message can be intercepted. And it's censored all the time. This platform, it's completely private, okay? So they came to the US, they developed this product, and they wanted to market it into the US to privacy-conscious individuals. And usually most of them are on the conservative side of the political spectrum, you know, because they think the big brother is watching them and all that, right? Mm-hmm. But they didn't have any money in the bank. They had $400,000 in the bank. They had a great product. No money in the bank. Well, we raised them $9 million, right? Through what's called a private placement. So when you buy shares in a public company, you can buy them on an exchange and you pay another shareholder and you buy them from another shareholder. But you can also, what's called a private placement, buy the shares directly from the company. Mm-hmm. So the company issues more shares. Yeah, they issue new shares. You give them the money directly. Now, that money can be used for different purposes, right? So in this case, Globex has our $9 million, and they are using it to market the product, right? And now their revenues are exploding because of our money.
Infusion.
Yeah.
So you raised this all within your community?
Yeah, within 12 hours.
Within 12 hours, and did they give you guys a better deal than the current share price, I assume?
Yes, so there's usually a discount.
Yeah.
Like a 10, 20% discount, and then there's usually a warrant attached to it, or half a warrant.
What is a warrant?
Okay, so let's say, for example, the stock is trading at $1.
Right.
Okay, and you raised $10 million. They issue 10 million shares. And then instead of selling it at $1, they give it to you at 90 cents.
Mm-hmm.
But then they also give you half a warrant, which gives you the right, not the obligation, to purchase more shares at a predetermined price. So it might be you can buy more shares at $1.50. So if our money is successful and it catalyzes the stock to, let's say, go to $5,
Yeah.
we have the right to buy more shares at $1.50.
Isn't this similar to like an option?
Yes, but
Okay.
the difference between option and warrant is that an option, you have the right to buy it from another investor. A warrant is you buy it directly from the company.
Okay, so they're going to issue more shares at
Yeah.
that price again.
Yeah.
Okay.
Yeah.
So when these tech companies and stuff offer their employees options, like how does that work compared to what you're saying?
It's similar. It's very similar.
Because
Yeah,
they're creating
yeah,
these new
yeah,
shares
yeah,
before they
yeah.
go public.
Yes. Yes.
Okay.
So in this case, it's also like through the company.
Now, when they do this, obviously they're increasing their market cap by issuing more shares. Does it usually make the share price go down since there's more shares out there? How does that work?
It depends on what the money is used for.
Right.
If you, because it's dilution, right?
Right.
If the company dilutes because they're running out of money to pay for their office building rent, or then it's bad, right? But if the company dilutes and then the dilution is going to create more value,
Yeah.
then that's good.
Right.
Similar to like a real estate deal. Let's say you're a flipper and you found this house to flip, but it requires $200,000 and you only have 50,
Right.
right? Then you're like, well, let me contact Ryan, see if he can come in with me. So now he has to give you part of the deal.
Right.
He dilutes himself, but now it's more beneficial to him to dilute himself because together you're going to create more value.
Right. That
So
makes
the
sense.
same thing for companies.
Okay. So you're going directly to these companies. You're trying to figure out where you can add value to them because you know by adding your value, you're going to make your own investment go up. So I guess what's the first step for you when like just finding a good deal? Like, because that's what you're looking for at the end of the day. You're like, okay, where are these companies that no one's looking at, right? Everyone's looking at Apple and Tesla and these guys. So what are you first doing to find good deals? What's your day look like?
I go through every company on an exchange, one by one.
Really?
Yes. So, for example,
How many companies are on an exchange?
depends on which exchange. Because if we're looking, the exchanges that I like are Canadian Stock Exchange, Toronto Stock Exchange Venture, TSXV, and OTC, which is over-the-counter security. So over-the-counter is not really an exchange, but for now, let's call it an exchange. Canadian Stock Exchange will have about 700 companies listed. Toronto Stock Exchange Venture, I believe, is like 3,000. And then OTC might have 10,000. So in 2019, I went through 6,000 companies, one by one.
How many, like, so, in, say you evaluated 300 days out of the year, you're evaluating, how many is that? 20 a day?
Yeah, but sometimes you eliminate them quick. Because,
Okay.
for example...
Wait, no, that's more than 20. 300 days. Oh, yeah, 20 a day.
Yeah.
Okay.
You see, look, when you are dealing with smaller companies, a lot of them, I would say 80% of them are not investable.
They're just junk.
They're just junk. They don't have any revenues. Or there might be looking for gold or silver or pharma, no revenues. Big upside, big promises, but nothing real. Yeah, I'm not going to look at those companies. I'm not interested.
How many of these are like scams, do you think?
I don't know.
Like, do you think that they're actually trying to go do stuff or they're just...
I don't think so, but there's a percentage of them that will, because there's less regulation. But that's why the due diligence is so important for these companies. So
Right.
if, let's say, I find one that, has revenues, has something interesting to them, I'm not going to just listen to what they tell me. I'm going to call their clients. I'm going to call their suppliers. I'm going to find out on LinkedIn employees and former employees, and I'm going to get on the phone with these people to see if this is for real.
Yeah.
And like if you call the client, you're going to find out if there's something special there. Like, why are you using this product versus another product? Like, you're going to know so much about the company. So it's going to give you the comfort.
If I was to go, like, took your approach, okay, say there's 20 companies I'm going to look at today. First thing I'm going to do is Google them, see what Google says about them, right? Yeah. And you could probably instantly tell if they have no online presence or anything, they're probably not worth looking more into, right?
Depends, because some businesses don't need online presence. If they're selling to business,
okay.
Like I have one company that sells directly to governmental agencies. Like it doesn't benefit them to have an online presence.
It doesn't matter.
Right, it doesn't matter.
Okay. Yeah. So you're just looking at them, and just by gut, you're like, okay, these guys aren't really worth, pursuing anymore.
Right.
And you trash out, 15 of them. And then the other 5, you're like, okay, these look interesting.
Yeah. I'm
going to go and look on LinkedIn. I'm going to go and look at the CEO's, Facebook and everything else, just see what they got going on. Yeah. And that's pretty much the process.
But I already, you see, before I look at a company, I already know what I don't want.
What do you not want?
I don't want bad businesses. So what is a shitty business?
Right.
Okay. Well, let's think about what is a good business. Do you prefer recurring revenue or one-time revenue?
Recurring.
Right?
Yeah.
Do you prefer revenues that are sticky versus not sticky?
Sticky.
Right? So for years I spent reading Warren Buffett and what he describes as businesses that have moats around them. Like you have a castle and you have a moat around the castle with the water, right? The water is there to protect the castle from the intruders. If you have a business that's successful, competitors want to take it from you.
Right.
So you want to look for businesses that have moats. So I'm looking for companies that, it's hard for clients to switch.
Okay.
Okay, sticky. Maybe they have a brand and the brand is growing.
Mm-hmm.
Maybe they have some economies of scale, or maybe the product is technologically better, or maybe they have a network effect, like eBay has a network effect. The more people are on this platform, the more people want to buy from that platform.
Right.
So I'm looking for that qualitative aspect to those businesses. And if it's, a very capital-intensive business, in other words, growing revenues cheaply is different than growing revenues expensively.
Mm-hmm.
Your courses, that's a cheap way to grow. It doesn't cost you any more to sell another course.
Right.
That's one of the best businesses in the world.
Yep.
But if you have an apartment building, you want to grow it, you have to add another unit.
Yeah.
Right? And that's capital intensive.
Yeah.
Different.
What's funny is by the time this comes out, I'll have released a video literally saying just that. I basically said why I hate flipping houses. That's the clickbait. And, I still love flipping houses. Obviously we still do it better than most people. But one of the reasons I was like, I hate flipping houses because it's so capital intensive. I'm like, for me to scale this, let's just say I want to go and do, $20 million in gross profit. Not even revenue. Like we probably sold over 20 million in houses. So like on stock exchange, they'll say, okay, they did over 20 million in revenues, right? For me to go try and get over 100 million in house flipping revenues, dude, we got to raise a lot of money. We got to get a ton of contractors. We got to go get a ton of materials, the supply chain. I'm like, this is not a business I personally want to scale. And to your point, it's not really a business that somebody else probably wants to invest in because it takes so much capital to grow it. And then I look at, my, like you said, real estate education company, Future Flipper. I look at my e-commerce company where, we don't have the capital problems because we drop ship and our clients cover the cost of that. So I look at scaling those businesses and I'm like, dude, this is 1,000x easier. And if I was an investor, I'd be trying to go get into those businesses, and buy a share from me if I was ever selling.
You see, before I came here, I was imagining that you would tell me, I don't know anything about the stock market. And I was imagining to myself telling you that you are more likely to understand the stock market than an MBA student. because you run businesses.
Right.
I don't understand the stock market. I understand businesses.
Right.
That's all I'm interested in. Stock market is just a way to own the businesses. That's it.
Right.
So if you can go through the process like yourself, like, oh, this business is so capital intensive, it's so hard to scale, and this one is so nice to scale.
Yep.
Like you lived through it. But here's another catch to this. Depending on where you are in your financial wealth, flipping is better at the beginning. If I only have 20,000 to my name, it's better for me to find a house for flip.
Oh, 100%.
100%.
Yeah.
But if I have $10 million to my name, I'm better off finding a microcap stock, or because I can get more leverage out of it. So like I always tell people, look, stock market might not be for you. Microcaps might not be for you, depending on what you have. It might be better for you to flip a car.
Yeah.
Or do something else with it.
I tell people that all the time. I'm like, they're like, okay, Ryan, I got $10,000. What should I do? I'm like, you should definitely not invest in stocks, because like you're going to be sitting there waiting, hoping that it pans out. When in reality, with 10 grand, like you said, we can go flip a house, we could flip a car, we could make that money, and then as you develop more wealth, cool, start throwing it in some freaking moonshots, like microcaps or
exactly,
everything.
Let me give you another example. I listened to one of your videos when you talked about Zillow, how Zillow got into flipping, right? And I'm like, that was the dumbest move Zillow could have done.
Oh, dude, they had the best tech business ever.
Yeah, they have this wonderful business, and then they go into this awful business.
100%. I was like, this
it doesn't
is
make
so
any
dumb.
sense.
Yeah, when I saw them do that originally, because I was a part of their beta testing, I said, dude, why? Why would you want to be in this business when you have the greatest business in the world? You're essentially eBay. Like, people go to your website, you're just feeding them ads, feeding them services, you charge them for leads, cost you nothing other than maintaining your website because you have the network effect.
Exactly.
Yeah.
Exactly.
Stupid. And it bit them.
Yeah. Yeah. But I'm actually going to make a video about how you can get advantage over big companies, and I'm going to use Zillow for that, because Zillow cannot flip houses effectively. But you as an individual, you can.
Right.
Again, going back to the same, if you have 100 grand, 50 grand, that's a better use of your money.
Yeah, I agree, 100%.
We all know that I love creating passive income through rental properties, but did you know that you can create passive income through owning an e-commerce store? My company, Lunar Ecom, can build and manage a store for you on Amazon or Walmart. We'll handle everything from starting the store, picking the products, and all the day-to-day operations. It's completely passive for you. If you'd like to learn how store owners are making thousands a month in passive income, head over and watch the case study at lunarecom.com. It will explain everything you need to know about the industry and why I'm so excited about it. So to see the case study, head over to lunarecom.com.
Most people want to get rich at all costs. They make sacrifices with their family, their health, and their faith, all in the pursuit of money without even realizing it. But what if I told you it doesn't have to be that way? What if you could grow your wealth in all areas of life? Well, it's possible, and that's why I created The Wealthy Way. It's a community of people striving to grow together in all areas. And we have multiple tools for you to use that are completely free. You can get access to the Wealthy Way Planner, where you can set goals and hold yourself accountable on a daily basis. We also have our Wealth Builder Academy, which is over 4 hours of content teaching you how to manage your time, create the right goals, and all the biggest secrets I've used to grow my life, not only in my net worth, but in all aspects. Lastly, we have our Discord community where thousands of wealth builders are all over the world encouraging one another and growing together. And once again, all of this is completely free. There are no upsells, there are no hidden catches. For me, this is a passion project, and I want to build a community of like-minded people. So if you want to start living the wealthy way today, go to wealthyway.com. There you can get all the free resources like the course, planner, and Discord community. So go to wealthyway.com. So microcaps, obviously, like you said, they got this stigma against them. And I think a lot of that comes from the mainstream media and Wall Street, because they've been making, billions, trillions forever by keeping the status quo. And it's kind of funny because one of my followers, really smart Wall Street guy, private equity guy, originally I was trying to buy into Rivian because I'm buying a Rivian. I like the company. I've been following them for years. And I'm like, this company's going to be big. I just, if there was a way for me to invest back then 3 years ago, I would have did it like as much as I could because I was like, they get it. And then eventually they got investments from Amazon and Ford and all these guys. And I'm like, yep. He's like, dude, the last thing you want to do is buy Rivian at this point at the IPO because he's like, all of these, he's like, the game is rigged, man. Like all these Wall Street companies, they get the, whatever you're calling them warrants, they get the option to buy these shares at way below what they're going to go public for. And he was just telling me all the behind the scenes crap that happens when a company goes public. And I'm like, dude.
So let me just say something about this. You see, one of the reasons why people are not aware of the microcap stocks is because the traditional way to go public is the following. The company is private. They get private funding, venture capital. Mm-hmm. After the company grows big enough, they go on NASDAQ. That's the or New York Stock Exchange. That's the traditional route. The companies that I'm talking about take alternative route. So, for example, your future flipping business.
Yep.
Let's just say it's worth $10 million. Okay? You can't go on NASDAQ.
Too small.
Too small.
Yeah.
But you might want to give yourself your investors liquidity. You can go public on Canadian Stock Exchange for only $250,000 a year. That's an alternative route to the traditional venture capital route. And some companies choose that route. Some companies go to Canadian Stock Exchange or Toronto Stock Exchange or OTC because there is no U.S. equivalent.
So, okay, now you get me intrigued. A lot of my buddies who have private companies, I know many of whom who've sold their companies, and they say, hey, here's the deal. Until you get over 5 million EBITDA, private equity's not interested in you. And at that point, you're going to get a much bigger multiple over 5 million. And depending on the industry and what you're in and the growth you're having, all these factors. And I'm not looking to sell any of my companies, but I am building them. Like, hey, this should not require me, at some point. So how do I get to that level, right? But I've never once thought about taking them public. It's always been like, okay, maybe one day we'll sell to private equity. So why would I go public on, one of these Canadian stock exchanges versus just selling? Well, like, what's the benefit? What do I have to do different in my day-to-day business once that happens?
Well, you could take them public on these exchanges. One, it's cheaper. It only costs you $250,000 a year to be public.
Okay.
And then two, you can keep owning the company. And when you take it public, you obviously will get capital injection.
Right.
And that capital injection you can use to grow your business.
Okay.
And still own it. If you sell to private equity, you're done.
Yeah.
Right? They take your business, they inject capital, they grow it. You don't get any benefit from it.
Okay. So using your prior example, let's just say Future Flipper's worth $10 million, right? And I own it all. So I go public. What happens to my portion? Like, I'm just choosing to sell. Like, how does the price get determined? How many shares? Like, how does it all work?
Okay, so you might sell all of it, or you might sell some of it and hold. Let's say you're going to hold 50% of it.
Okay.
And then the other 50% you sell it to public investors.
Okay.
You would have to, hire a securities lawyer or an investment banker that would take you, public on that exchange. I mean, of course, there's a process. I am not the expert in the process. I'm the expert in buying them after they're already public, right? But
right.
I've heard stories from my CEOs on how they did it. So if you were interested, I can connect you with them. Mm-hmm. But I can just give you generalities.
Yeah. So if it was worth $10 million, I sold 50%. Our market cap would still be $10 million. I just own $5 million worth of shares.
Yeah. And it would have to be valued independently, and all that. Yeah.
Right. Interesting. So basically, I could go raise $5 million in cash in this scenario and use it how I see fit. I can go grow the business. Right. I'm sure a lot of these guys take some for themselves for all their work.
Of course.
Okay. That's an interesting thing to think about as these businesses grow.
Yeah.
I've never even considered it. How much is it to be on the NASDAQ? Do you know?
At least 2 million, maybe 1 million.
2 million
It's
a year.
more. So you have to be bigger, right? And let me give you. I gave you a story. I gave you now 3 stories, 2 stories. I gave you a story of Oracle. I gave you a story of Globex. Now let me give you a story of Voxter. Okay. So, and the reason why I'm giving you a story of Voxter is because you are in real estate. Do you know an investor, famous investor called Peter Lynch?
Mm-hmm.
Okay, so Peter Lynch, one of his advice to people was that you can get an advantage over Wall Street if you look for companies within your own industry, okay?
Mm-hmm.
Because if you're a doctor, maybe you are prescribing a particular medication and you see it taking off before Wall Street will ever, way before Wall Street will catch on, right?
Right.
So I used to be a real estate appraiser.
Yep.
And when I was going through those 6,000 companies, one company that I found was Voxter. And Voxter was solving a problem because in the real estate space, we have a problem that there's not enough appraisers. And then appraisals take forever, and they are very stressful, and the average age of an appraiser is 62 years old. So I found this company, and I'm like, oh, wow, they're solving this problem. They have this platform. They're putting different companies together with different databases to make appraisers faster, okay? And they have this software called ANOW that is, like, I think right now, half of the appraisers are using it.
Mm-hmm.
And UWM, United Wholesale Mortgage, just signed up for the platform, and they are quiet about it because they don't want the competitors to know that they signed up for the platform. And this company is literally revolutionizing the real estate space. And real estate brokers, title companies, they have no idea what's happening.
Right.
And I bought the company 10x ago. And I think that I own about $1.5 million worth of the stock. I think I'll make $50 million on it after it goes to NASDAQ, which is next year. And I'm telling this to you because I know a lot of people that are listening to you are in real estate, and I can guarantee you, if you find me one person that has heard of this company,
Yeah.
I don't know, I'll take him out to dinner or something.
I've never heard of it.
Exactly. And so it's an example of, like, you know, you can have an expertise in an area and you can use that expertise in your advantage. And what I see most of the time is when people have a certain advantage, they throw away that advantage. And then they call their financial advisor and ask, hey, what do you think about Voxter? Like, why are you asking him about
Yeah, he don't
that?
know.
Yeah.
Right. Yeah, dude, I'm gonna have to look into it, man. By the time this podcast comes out, I might already be an investor in Voxter. I don't know. Maybe I should hit them up and see if they'll give me some shares for promo or something. I don't know. You probably have the CEO's number.
I do. I do, of course.
Yeah.
I made, just to give myself a little plug, I made an 11 video series on Voxter.
Oh, okay.
On my YouTube channel. So because it's another way for me to add value to my companies.
Right.
Is to
Talk
about it, right? But also to explain it, because think about this. You're a real estate agent. You know about how to be a real estate agent. How much do you really know about the appraisal side? You have an idea, but you don't know much.
Right.
If you're on the title side, you don't know much about the other areas.
Right.
So that's when you are in real estate. If you're outside of real estate, you're clueless.
Yeah.
Like, you have no idea. So I had to create this series to explain this to a fifth grader.
Yeah. You know what's interesting is there's so many things happening in real estate. Like, you know, automating appraisals is for sure something that's going to happen. I've talked about this before, but, you know, maybe the blockchain changes how title companies are run, right? You don't need title insurance if you have the blockchain. Like, and I'm just thinking, okay, you know, you got Matterport. Matterport's getting really heavy, and they're doing all these virtual tours, and now they're talking about being a metaverse company and all these different things. And I'm like, man, I think all these things are going to happen in the future. I just don't know how long it's going to take. And to sit there and wait for the company to actually execute it and to gain mass adoption takes a tremendous amount of patience.
When I first discovered Voxter, it was in 2009. No, 2019. Okay. I wasn't interested.
Yeah.
I looked at it and I'm like, yeah, nice. They're making appraisals faster. No, the appraisers are too stubborn. They're not going to change.
Yeah.
They're too old. They just learned how to use a computer yesterday.
And you were an appraiser, so you know it.
And I'm like, no way. The banking system is not going to change. It's going to take forever. And then COVID came.
Yep.
And I said, now's the time. They're going to change. They're going to have to change because how are they going to inspect the houses?
Yeah.
Right? COVID was the catalyst for the entire change. And I was listening to an interview with a CoreLogic chief appraiser, and he said that during his entire career, he has never changed so much. He has never seen so much technological change in the appraisal space because of COVID. And I saw that. I'm like, COVID? I went back to the company and I called the CEO, and he talked to me for 2 hours, and I was like, I'm sold. Like, I know it's going to work.
Yeah.
Because you have the catalyst, you know?
Right.
Yeah. But another thing about what's interesting, you mentioned something about title. You see, a lot of people don't realize the title is like a scam. Think about insurance in general, car insurance, health insurance. The insurance companies collect premiums. Most of the premiums, 80% of the premiums, get paid out in claims.
Right.
They price their policies based on probabilities.
Mm-hmm.
But most of it is paid out in claims. When it comes to the title insurance, 3% is paid out in claims. So it's like these insurance companies, these title companies are stealing money from the consumers.
Right.
So Fannie Mae recently published a working paper saying that for the low-income Americans, the closing costs, which includes title and appraisal, are higher than the down payment.
That's crazy.
That's ridiculous.
Yeah.
But now you might think, why did they come out with this paper? Did they come out with this paper just because, or did they come out with this paper because they have a solution?
I don't know, man. I mean, the government, I don't know, doesn't have many solutions. So
Well, I can tell you that they came out with this paper because there's a solution. And if you look at the wording that they are using in the paper and the wording that Voxter uses in its presentations, it's almost the same wording. So there might be more to this paper than people think.
Yeah.
And so when you're looking at the title insurance, what Voxter is working on is, and they've been working on it for a while, is an alternative product to a title insurance, okay, which is a attorney opinion letter with the data, and they have a patent on it. And if Fannie Mae changes the rules, guidelines, and allow attorney opinion letter to be used as an alternative product to a title insurance, I'll make $50 million on Voxter.
That's crazy.
Because that's so monumental. This changes, as the CEO told me, is tectonic in the title space. It's so huge because think about a mortgage company. A mortgage company advertises, we can give you a mortgage for 4%.
Right.
And then they say, and the closing costs are $3,000.
Right.
And now imagine another mortgage provider comes, we'll give you 4%, closing costs $1,000.
Yeah.
Which one are you going to go with?
A mortgage company. So everyone would have to adopt.
And that's because of the appraisal and because of the title.
Right.
And Voxter solves both of these problems.
Yeah. Yeah, all you need them to do is solve one.
That's right.
If they solve one, you're good.
You're good.
If they solve two, then it's a home run.
Yeah.
So, yeah, I think that's super interesting. And I like your point of knowing your advantage. You know, if I'm in the real estate space, especially too with my social media platform, it would make sense for me to start calling up these CEOs and being like, what you got going on? Because I understand if they're actually running things the right way and it's going to make sense in the real estate space, but I also have the ability to talk about them.
You could literally transform some companies.
Yeah.
Because let's say you come in and you say, well, you would buy yourself some stock, right? Or you would maybe,
I'd make them give me stock.
Yeah. Well, I mean, sure, whatever, for your services or whatever.
Yeah.
But let's say you come in and you buy yourself some stock. Or maybe you come in and you say, my company can inject some capital into you.
Right.
Yeah. And then you could be on the receiving end. You could be like, I can talk about the company. I can talk about the product. Like, for example, the product with the secure email and messaging communication, right? Do you know that when real estate agents sell a house, they use their Gmail and Yahoo to communicate with the clients?
Yep.
Right? All of these emails, all of the personal data is out there for stealing.
Right.
Right? And then this company that has that system, they signed up with Remax, right? Because like I use their product. Why do I use their product? I bought the product because sometimes, like I said, I raise money for these companies.
Right.
So I do what's called private placements. And then private placements, the way they happen is the company gives me an application and I send out the application to my people, right? The first time I did it through Yahoo. And I'm thinking, they're sending me all of their data, all of their address, everything through that. And I'm like, I need to purchase this system because I owe it to them. I owe them the privacy.
Right.
And then I'm thinking, oh my God, there's so many real estate agents out there that would think the same way I do. There's so many lawyers out there that be like, I need to protect the data.
Right.
So a company like this you could literally transform it just by leveraging your social media platform and letting people know, hey, I'm Ryan Pineda, I'm behind this company, it's good. It's priceless.
Yeah, 100%. I'm an investor, whatever.
Yeah.
So that definitely gives me things to think about because up to this point in my career, as far as business goes, it's always been startup for me. I'm going to go found my own companies and do, things I want to do because I can control them and have real influence over them. But to your point, there are a lot of great companies around that could use my services, whether it's my expertise or my influence or whatever, or capital, like you said, and have a drastic change on their business, which in turn has a drastic change on, my investment.
Yeah. I mean, let me go back to this example of Oracle. I have 5,000 subscribers to my YouTube. You have 1 million followers across your social media, right?
Right.
I am so tiny. And because of my influence with Oracle, we created $450 million worth of value just because I was talking about the company for 4 years. Okay? Like almost 98% of investors that are in that company are in it because of me.
That's crazy.
Yeah, because I've been talking about it for years. And then when the legal situation with the title were resolved, I helped this company raise $13 million. And that $13 million is now being used for drilling in order to prepare the property for sale to a major mining companies. But like I don't want to say, I don't want to offend anyone. I don't want to say that I was like the person, but I was very influential in the social media space with such a tiny audience.
Right.
And now you imagine if you have someone who has multiple my audience, how much impact a person like this could make on those companies.
Yeah. Man, I need to start looking at these microcaps, dude. One thing that's funny is I've been doing a lot with NFTs lately. And so ever since I make these videos about NFTs, I've already seen the influence it's had on having people, go towards that NFT because I'm in it. But I have all these companies, these NFT companies that reach out to me. They're like, dude, can you promote us? Can you do this, that? And I don't do anything. Like, because to me, the crypto space is so full of scams. Like 99% of stuff is scams. So I'm looking at it. And I'm like, okay, microcaps kind of have those same stigmas, maybe less than crypto, but still that kind of stigma. What are your thoughts on crypto as far as, being these investments that are undervalued? Maybe you can go talk to the team and all this stuff. What do you think?
Okay, so I haven't been very pro crypto or NFTs for a simple reason. When I spend my money, remember how I said, price is what you pay, value is what you get. I don't know what I'm getting in return.
Right.
Like, I don't know. When I look at a company, I can look at the revenues. I can look at what I think they're going to make.
Right.
I don't know.
Most of these coins aren't companies.
I don't know.
They're just coins.
Right. I don't know. It's like, it's not my specialty to be valuing it, 1 times hype, 2 times hype. I don't know. But I can value something based on something
actual
real.
Real world business.
Right. So I was actually looking into, NFTs. And at first reaction was like, I was like, where is this world going? But then I'm like, if I were to get involved in NFTs, what I would like to get involved is, hey, can I buy a platform that those things are traded on? Or can I buy something that they're going to make money by other people trading it? But like as a particular NFT, it's like why is this punk or crypto punk?
Yeah.
Like what am I getting back? Kind of like I have a friend who is into comic books.
Right.
And there's this whole community of comic books, right? And I just look at it and I'm like,
it's a collectible.
It's a collectible.
It's not a business. Yeah. It's just like any other collectible or art or, you know, it's
exactly.
Like you're betting on the perceived value of it.
Exactly.
But to your point, and people who already know me know this is the case, the reason I'm very interested in NFTs is not because I'm just going to go give people some perceived value of art. I have a whole business, you know, plan behind it that
like what?
I can't tell you right now.
Oh, okay,
but,
okay. You're working on a startup.
Yeah.
Yeah, okay.
Yeah.
Well, but
an actual business.
Yeah, you see, that's what I would be interested in. It's like, how can I make money around that I get, you know?
That's what I get too.
Yeah.
NFTs just happen to be the vehicle in which you deliver it.
I mean, just kind of like eBay, right? I'm not interested in buying and selling the stuff on eBay, but I like the platform.
Right.
Because it has a network effect and yeah.
For sure. Well, dude, this has been super enlightening, man. I learned a ton of stuff on this episode. I typically, you know, a lot of the people that we talk to, sometimes I end up just advising them on what to do, but you open up a lot of possibilities for things I had not considered about potentially partnering with these companies, potentially, you know, going public myself at some point in time. And, dude, I'm glad you came on, man. Where can people find you?
Take my name, my hard name, put it
Look in the title.
Put it into YouTube, and you'll find my YouTube channel.
Yeah.
Or go to microcapexplosions.com, and you will find the links. But I do want to say one thing about your YouTube channel, because I do want to give you kudos, okay? I looked at your videos, and I want to make my YouTube channel better, okay? I want to increase the quality of my videos. And I looked at your videos, and I called your guys, and I said,
this is what you do.
Yeah.
You just call people's teams.
Yeah, I said to Justin, I'm like, Justin, whatever camera you have, whatever system you use, I want it. Just tell me what it is. I want to be better. So I just wanted to congratulate you on this. It's fantastic. And I want to make, you know, my channel, you know, better because you inspired me.
I appreciate that, man. It means a lot. Well, guys, make sure you guys go subscribe to his channel and make sure that you subscribe to this podcast. I hope you enjoyed it. If you want more stock guys on, definitely comment below and let us know. So we'll catch you on the next podcast. Peace.
Thanks for watching The Ryan Pineda Show. If you want to work with me, head over to ryanpineda.com. You can find my courses, coaching programs, and upcoming events. We also have free resources you can download, so head over to ryanpineda.com.